So in your situation, because you have good equity in your home, your payments that you're making right now can be turned into cash flow very easily because you have a lot of room to work with. And I'm going to show you what that looks like. Okay, so your total debt, it looks like, including your house and everything, is $435,000.
Okay.
All right. Now, when you're using the value of your home, which is 660,000, and in Virginia, it's a 90% loan to value, meaning that if you go to them and tell them that you want to use the equity in your home, they would allow you about $594,000 to do with whatever you want to do with it, which would include paying off your debt. Okay. That'd pay off everything, even your home. So 594,000, and then take away the 435 that you currently owe, means that you would have $159,000 available for you to do whatever you need to do for the next 10 years, because it's a 10-year draw.
Okay.
All right. But this 435,000 would be the balance that you owe on your new HELOC.
Okay.
All right. So if you follow the videos and you know that as long as your income goes into here every month, then you're going to satisfy that payment. So now all of your payments have stopped and been turned into cash flow, meaning that you have gained your $2,155 house payment, your $320 in credit card payments, and your $205 in student loan payments, meaning that you now have a cash flow of $2,680. Now this cash flow will come in and start working off this debt.
Okay.
So let's see what that looks like. Your living expenses total $2,859 now. So that would be all that's coming out is $2,859 in expenses. And let's see what your interest would be on that. The interest is getting cut. According to the feds, they're going to be cutting the interest, which means that I'm figuring this very high because I'm figuring it at today's rates. Okay. So I just want to give you the worst case scenario. So $1,600 would be your average interest paid on throughout the life of this new line of credit. So what happens is your income of about $5,700, let's say $5,700, all would go into this account whenever you get paid, whether it's weekly or monthly, it doesn't matter. So you have 435, 57.
Right. It goes in at three different dates of the month.
Oh, that's even better. Okay. So 329,300 would be your low balance for the first month. Then you would add the 2,859. You would pay your expenses out of this account every month. So you're going to be at 432. And let's see what that means for a work down. So 1141. Okay, that's still going to be a long payoff. Okay, so you were talking about, should you think about using some of your retirement to pay off the credit card debt? I don't think that that's something that I would consider right now because you are living basically off of your annuities right now, right? Is that where you're getting your monthly incomes?
No, we're not. We haven't touched any of the retirement accounts yet.
Okay.
The only income is for the Social Security, both my husband and myself, both those two, the 1428 and the 2,770 are the Social Security checks.
Okay.
And then the military retirement is the 1553.
Okay, so you're not touching that right now. Well, that's a good thing.
Not yet, but we don't have much wiggle room in there after.
Right. Well, I'm thinking because you have a couple of options, I think, and I'm trying to, because a bank, trying to see what they would need to give you that access to your equity, because you have a good income. Can you start taking withdrawals off of your retirement?
Yes, we can.
Well, let me show you what it would look like if you pull just a little bit. You don't need a lot. You just need a little bit of money, monthly additional coming in to make this happen. So let's see what that looks like. Okay, so if you were able to bring in $2,000 in additional income per month, this $435,000 with your expenses coming out and with the interest that they're going to be charging on this account, if you had the additional $2,000 a month, that would pay off the $435,000 in 12 years.
In 12 years, everything would be paid.
Yes. And if you decided to do more income, you could cut that down as far as you wanted to cut it. And then you would be out of debt. So let's say you said, hey, we're going to draw, let's draw $5,000 a month off of the annuity, which that ought to just be your interest anyway. That shouldn't be like coming off of your balance. So let's say that you decided that, then you're talking about an extra $5,000 a month, making a huge deal. Since you have options to do it, that means that would pay off in 79 months. So right at 6.5, 7 years, which sounds a lot better. So you all need to talk about what that looks like to you, what you can do. I don't know how you're all feeling about touching that account. I'm just saying you need a little more income to start actually making a big difference in this balance in a short amount of time.
Mm-hmm.
And the more income that you can pull off of that annuity is the faster you're going to pay this off. So you're completely out of debt. And now you don't have to worry about the annuity, not being there because you're not going to have to use it.
Right. I'm thinking about that would be something like $7,000 coming out of the annuity.
No, that'd be 5,000.
Oh, a total of
Yeah.
5,000 a month coming out
Yes.
of the annuity.
Mm-hmm.
I don't know, but when I do it in my head, it just seems to bring down the annuity a lot.
Well, you're drawing interest on that 500,000, but I think that's probably what you're taking off in interest. So it won't keep growing, but the balance should not decrease because you're pulling the interest. You're not taking out of the actual fund. You're just taking the interest off of it. I have a lender that would work with you one-on-one. I'll talk to him about dealing with you all in the situation that you have. If I were in your situation, this is exactly what I would be looking to do. I personally am doing exactly what I'm talking to you about, which is to get the equity out of your home, have it sitting there so that whatever you want to do, you can use it. And you're not worried about paying all of the interest that you're paying right now with the credit card debt and stuff.
Thank you so very much.
You are welcome. I hope that I gave you some ideas to think about. And then, if you think of something that you forgot to ask, you feel free to email me. Or if you have questions about what he says, feel free to email me. I appreciate you and you have a great day. I'm just going to be praying about this, okay?
Thank you very much. I need it all.
All right. Well, God bless you.
God bless you too.
All right, bye-bye. Hello. I have some terrific news. We are opening up some new services for you. So let me talk just a little bit about them. One, we have a new calendar open for my services that is going to offer more times for availability. And also we're going to have Emily. Emily is a team member and she's going to be working with you on mindset and vision. So if you want to join Emily with the Mindset, Reset, and Vision Mastermind, the link for her is below. Also, we have Anna. Anna is a team member and she is doing email consultations. These have been approved by me. They are excellent at what they do, and they have learned well with the way I teach and what I want to share with my audience. So I am excited to share them with you. So if you are interested in an email consultation, join Anna. She'll be glad to help you. If you are interested in getting your mindset changed, not just about Velocity Banking and not just with your finances, but what does your life goals look like? Emily can help you with that. I am so excited to get these two team members up and running to help you get started in your life goals and whatever it is that you're wanting to accomplish. I know that we can help you and we're excited to do so. So if you're interested, check out the links below and I look forward to seeing you in the next video.